Welcome to the About podcast. Here we explore your financial health in simple and easy to understand ways.
All right, well, welcome everybody back to the About podcast. My name is Jeremy Scott, one of your hosts here, and we've got a great show for you today. We're talking about fees, one of those things that we all love paying so much. Not really. Roy, how you doing?
Hey, buddy, I'm all in
Okay.
today. And my question for you is,
Yes,
in your personal life, what's the last fee you paid?
the last fee I paid. Does a speeding ticket count?
Did you get one?
Because technically I haven't paid it yet. It's sitting on. They're doing camera enforcement in Colorado now.
Oh,
and
you got the zone. You got caught in the zone.
Got caught in the zone.
Yep.
1 mile an hour over what I was supposed to be doing.
Yeah, so everybody, just to know you know what that means, typically if you had a speeding camera,
Yeah.
you would actually get just that snapshot in time and how fast you were going, right?
Yeah. Now.
Now they're actually putting a camera at the beginning and the end of a zone.
Yep.
And if your average miles per hour through that zone is more than the speed limit, then they'll send you a ticket.
They will. They will.
And you said you were 1 mile over?
I was 1 mile over the Grace. I think Grace is.
so
I
you're
think
like
they give
6
you.
miles
Yeah,
over.
6 miles over. Which I mean, it was a construction zone. I shouldn't have done it.
How dare you? You're a
I
pastor.
should not have done it. It's my fault. I will pay the ticket. So I don't know if that counts as a fee, but I think.
Well, it is a fee, but let's say a service fee, right? So it was for something.
Okay. I don't know. I don't always feel like I know all the fees I'm paying, because typically you're just given a bill or, tap here to pay, or whatever. And, it's I don't always know that I think I know all the fees that I'm paying.
That's a very good point. I think if all of our listeners just go ahead and pull out your cell phone bill.
Oh, yeah.
And go ahead and look on there.
Lots
and
of fees.
see, you're paying for a service of having cellular service.
Yeah.
But then there's a whole lot of stuff on there. You're like, what is this?
Right.
Right. And that's I don't know what I'm paying for.
Yes.
Right. They're just tacking something on. Well, today we're wanting to talk about.
The last big fee I paid was when we were, taking our timeshare credits and moving them, and you had to pay like a transfer fee. And by the time you added up all the fees, it ended up being quite a bit.
Quite a bit. Did you listen to my podcast about why I hate timeshares? I'm joking right now, but
yeah, well,
but I will tell you, Dave Ramsey is on a vendetta against timeshares.
I inherited it with my new wife.
Oh, well, that's delightful.
Yes.
Sometimes it just keeps giving.
We make the best of it. So, but yes, but I think today we're specifically talking about fees related to financial management and financial planning and, all that kind of stuff.
We're going to talk
that
about,
you live in.
We're going to talk about my services.
Yeah.
In my world, let's call it that. My world that I live in, the financial services world. So, the concept is around you pay a cost for something, and what is it you're paying for, and what's the value you're receiving.
Correct.
All right. So, I just want to kind of set the table, everybody. Historically, back in the day, right, when I wasn't even born, if you wanted to buy a stock or a bond, you had to go to a broker. And the way that it was the deal was brokered, right? So you actually paid a commission for that transaction. And then typically there was no ongoing costs. It was just, you want a stock, Jeremy? How much would you like? Here's the cost to transact it. Here's your stock.
There you go.
Okay. And a lot of times they would actually issue even paper shares. Right. So that is what they call the commission. And commission based is typically, and it still exists today, broker dealers are out there. They're institutions. They call themselves broker dealers. They broker those transactions still today. Right.
Yeah.
It still exists, and it's a thing.
Well, it's like if you buy a car, you're going to pay a commission to the person you're buying the car from.
Right. So, they typically broker that as a transaction for that investment.
Correct.
Okay. Now, are there additional services that come with that transaction? Maybe, maybe not. It just depends.
Because you're paying for the transaction.
That's right. You're paying for the transaction. That's why it's called a commission. So, is there any expectation, that you should be getting ongoing services from that? Is a question to ask yourself. If I purchase this, what am I going to get for purchasing this? Is there anything else that goes with it? Like annual checkups, or if something is wrong with it, anyways, right? You just get a little maybe advice or something. So, that's typically specific to an investment.
Right.
Right. So the cost of investing. Okay. So that's commission. And then there's another thing called fee-based. And So now we're kind of stepping over the line in regards to regulators. So the regulators who oversee commissions is primarily FINRA, FINRA. And then commissions are under their umbrella, and they have a best interest standard. So if an advisor sells you something, they have to believe it's in your best interest based off of what they've discovered about you and what your goals are and that kind of stuff. Okay. So we step over the compliance line to a different institution, the SEC, and they have a fiduciary standard. We've talked about this on other episodes. So you've heard these words before, but
love the word fiduciary.
But fiduciary is much different because it's kind of like you have to know that it's best for the client, but also kind of be able to prove why it's best for the client. And so it's not as loosey-goosey, I guess I should say. So my parameters for evaluating what I'm investing people in and why are a little bit more in depth.
Gotcha.
Because I just want to make sure, right? I don't want there to be any question mark about it.
Great.
And I can get paid a fee for that. But the commission, you pay something up front on the transaction, right? Well, with the fee, typically you're paying an annual fee. And annual fee is based off of a few things, but let's just keep it simple. Amount of assets that are being managed.
Okay.
So as an example, if I had $100,000 and I have a 1% fee, then that means that I would be paid $1,000 over a 12-month period if that all things stayed at $100,000 for the entire year.
Right. Which you're hoping they're not.
Right. But included in that $1,000 is transactions for investments. So there are no costs to go in and out of different investments.
Oh, okay.
So that's fee-based.
Fee-based.
Now, the reason we call it fee-based is because I'm over on that fiduciary standard, but I'm also insurance licensed. Well, if I sell you term insurance, which maybe you have purchased from me, Jeremy.
Maybe I have. Wait, I did.
There was a commission paid to me. So, but that's the only way they pay. So I don't have any control around that.
Right.
But you still needed life insurance.
I did.
So it was in your planning needs. We identified that, and then I can solve that for you. So it's fee-based. So there's some situations where insurance products could have a commission attached to them, but in the investment products, primarily, there's no commissions attached. Okay. So fee-based, and then there's fee only. Okay. So, for instance, if you came to me, Jeremy, and you said, Roy, I just want some help to understand what I should be doing financially for my long-term plans. Here's what's important to me. I'll actually walk through that with you. We'll make a plan for you, and you just pay me a flat. It's many ways you can do it, but you pay a fee.
Pay a fee.
For the plan.
Okay.
All right. But I don't execute any of it. So it's fee only.
Right.
But you're just paying me a fee for the actual expertise that we bring to you and say, here's the plan, here's what you need to do.
Right. For crafting the plan.
That's right. And you could go to a number of institutions to actually execute said plan. But there's truly no commissions involved, nothing. It's just, and some people charge it by the hours, some charge it by, hey, the package is this.
Right.
That's just, but that's what it is.
So similar to like if you want an estate plan, you go to a estate plan attorney, you're going to pay a fee, and what you're buying for the fee is here's your estate plan.
And there's different estate planners too, right? Because some of those guys charge hourly, and some of them charge for the package.
Right. But it's a fee for a product or a service that you're getting. Right.
But at the end of the day, no matter if it's a fee only, hourly, or based, they know their cost and approximate time taken to do that, and they're going to roughly say this many hours and it's going to be this much. Okay, we're going to get that much money out, right? So however you slice it, you're going to be paying that.
And if you think about it, it makes sense. I mean, if you think like that's a fixed piece of work. Doing the estate plan is a fixed piece of work. It's got a beginning, a middle, to end to the work, a deliverable. So you're going to pay a one-time fee for that thing, versus what you were talking about before, fee-based. Where in that scenario, you're managing my money. Like if I, and I have, full disclosure, some money with Roy, but you're there, that's ongoing work, right? For you to manage and take care of and do all the things you got to do to make sure it's where it's supposed to be, in the portfolios and the check-ins and all the things that we do. Yep. So it makes sense that there's a reoccurring fee, based on that's proportional to the amount of money you're looking after. Yeah.
And then a great point that you're saying there is, Jeremy, is investments the only thing you've got in regards to my services?
Not at all.
Right. So the fee-based advisor typically is a more planning-based advisor. Whatever. Typically not. Whatever you want to look at that, but in the industry, it just seems like people are going that way, because how can I justify charging that fee if it's just for the investments?
Right.
There needs to be more. So I don't do estate planning. I'm not an attorney, but
Right.
did we talk about it and did I educate you about it before you actually engaged an attorney?
Oh, absolutely.
And then kind of gave you some like, here's what I've seen,
Right.
but I'm not advising you because I'm not an attorney.
Right.
Right. And then when you actually went and spoke to the attorney, you're like, okay, I understand what this means. And now I can actually have a more pointed conversation with the attorney. Potentially, if they're an hourly, it saves you time and cost.
Yeah.
Because you can go in more prepared.
Yeah. Well,
And then I'm part of that conversation too with the attorney, if you want it, right? I don't have to be, but I typically am for my clients where that's, it's again, more time I'm giving towards your situation.
yeah.
Right?
Absolutely.
So estate planning, and then there's also tax planning, right? And some people are more nuanced there, and some are pretty simple, right? And we've talked about your taxes, like we know it's pretty simple, right? It's pretty straightforward for you, for your household, and you do your taxes for your household, right?
We do. Yeah.
Yeah,
I
that's why I believe we talked about that. And then where was I going with that? Okay, then also like risk evaluation. I'm not talking about investment risk. That's obviously part of the investment piece of it.
Yeah.
But we've talked about other risks, like if you die.
Right.
I call it the what ifs. What if you lose your job? What if you lose your health? What if you lose your life?
Right.
Those are kind of the big what ifs that we can talk through. Like, what are the risks to my family? And what do we have in place if something like that did happen?
Right.
And you obviously have experienced the worst of the worst in that regard. For our listeners, he lost his spouse 4 years ago.
Yeah.
So
3 years.
3 years ago. So that's a very nuanced thing because everyone's different on what is risky to them as what not. But so my job is to evaluate what are your priorities. Why is it something that's important to you? I try to kind of get to the root feeling, right? Because even for you and your current spouse, we talked about some of your estate planning things, and there was some opinions that both of you guys had in the beginning.
Yeah. That we're not aligned.
We're not aligned. But when we kind of peeled back the onion of why,
Right.
we're like, oh, well, we actually are more aligned because this is important to us.
Right.
And you like came to an agreement like, okay, this makes perfect sense.
It worked out great.
Right. So I try to peel back those layers to be like, what's the real thing here you're thinking and why are you thinking it? And if you want to get to point B from point A, what do we need to actually do to make that happen? And do you guys come to agreement on that? And what's where you guys came to agreement?
Yeah. Well, I think that's really important, and I think that kind of planning, and it's we talk a lot, I think, on this podcast too about kind of things that feel a little worst case or whatever. We have conversations like this whole podcast is things you don't want to think about. But there's the other like life planning side of it too. Where you're just like, well, where do you want to go? Like, what are you in this career and you're going to be there forever? Are you thinking about making a transition? What do we need to have in place if you do want to make a transition? When do you want to retire? What do you want the retirement to look like? What's important to you in that retirement? So how much do we have to do now versus then? And, so I think there's also the other side of it is because sometimes I know I feel this and most of us probably do, is that for many of us, the things that money is one of, if not the most limiting thing for doing the things that we actually want to do.
Yep.
Whether that's, change careers, start a job, start a business, send the kids to college. When do we retire? How do we retire? Where do we retire? All that is primarily dependent on your financial capacity. And there's trade-offs. There's only so much. Because I only have so much income. I can only spend it so many different ways. I can only save it in so many different ways. So having a partner to kind of plan through that kind of things too, who's in a dispassionate place. I mean, you don't have a strong opinion about, where I retire someday or how that retirement looks, but you want to know because you want to help me reach my goals.
Right. And then is my job to tell you what to do?
No, I don't think so.
I mean, I would say 90% of the time. I do have a 10% time where I was like, you really need to do this, and here's why, right? But 90% of the time, it's more me asking questions around, what's important to them? Why is that important to you? What does that actually look like? What does that feel like? And there's been many a client, and even think of your own lives, listeners, you, Jeremy, have you ever created a kind of a fantasy in regards to how an experience is going to work out?
Oh, yeah.
And it doesn't work out that way. And when you actually look at it logically, like, I don't know why I ever felt like that. Like, I don't know why I ever thought that. So
how naive I was.
Right. So it's like me, I'm doing a little renovation on a house, and one of these
little reservation on your house. I've been to Roy's house. He's renovating. It is not a little renovation.
It's pretty small. But I have this fantasy in my head about I'm putting a front porch on the home, and sitting on that front porch, it's pointing to the mountains, watching the sunset over the mountains. Like that's a fantasy I'm building on my head, right? So sometimes people do that with their futures, with retirement, with financial decisions. You know, I actually had a really candid conversation with an advisor this morning. Was telling me that one of their clients is wanting to move to overseas. I can't remember what's France. It was France, and you know, they financially are really not in a situation where they should. Right. But this client went to France. They experienced it for 2 weeks. They loved it. Now they're moving there.
Oh,
That's a fantasy situation where they built something up in their head. They want to do it. Now they could do it and it may work out great, or they could do it and it could really be a bad situation. Right. But that's what I'm talking about.
Yeah.
So I'm trying to just help bring reality to those thoughts and ask why. And it's really interesting because if you ask why 3 times, I think it's 3 times, you tell me something, I say why. You tell me more about it, I say why. More about it, you say why. And that's usually the root cause.
Yeah.
Right. So I don't really need to give you advice. I need to help you understand what your thoughts are and why those thoughts are what they are. And a lot of times that comes down to what was your experience with money? How did you grow up with money? Right. Your wife versus you guys experience money differently from your experiences in life.
Yep.
And now you have decisions that, you know, have made decisions at this point in your life where you feel the way you feel.
yeah.
And that doesn't always align, right? Because you've had different experiences. But we need to come to a point where we can agree that this is the most important thing to us and this is what we're going to agree to do.
Absolutely.
Right? So regardless of where you come from background, we've gotten you to that point.
So shout out to our What is a Financial Planner episode where we dive really deep into this whole conversation. But I think bringing it back to today's about talking about just basically fees, and that's and what we're talking about is basically, you know, how Roy, you and people in your situation basically get paid for your work, and we all should want people to get paid for their work. I think sometimes, like if I go to the dentist, it's a little more obvious, you know what I'm paying for, you know, so maybe it's a little less obvious sometimes here, but there's still a lot of thought and intentionality and training that goes behind it, and thankfully, you know, but just because you don't give me a bill, you know, every year, you know, at least I don't think you do. I've never seen
No,
one.
I do not.
You know, but it's the fees are sort of automatic in the system. And I think you do a really wonderful job actually disclosing that and educating that. I mean, when we first came on board,
You talk about it almost every time. Like, what are you paying me?
yeah. And I think, you know, and so you have a very open sense about that. Some places are a little more opaque. And so if you want, it's something worth asking because there is some variance.
Yep.
Depending on, you know, and there's some variance. There's probably a little bit you get what you pay for, you know, in the industry too. And there's also some that maybe are more than you need.
Yeah. Well, and the concept all comes down to what are you paying for and what are you receiving for that?
Yeah.
And what's the expectation that you have as the person who's paying, right? And if it's commission based and you're like, I just wanted this transaction, by the way, commission based could be the cheapest way.
Yeah.
Clearly to own some stock of some sort, right? And you say, I want to buy, you know, $25,000 of this stock and just sit on it. There's no internal fees. There's no expenses ongoing. You just paid a one-time transaction. If you hold on to that thing for 10 years, you're like, well, that's the cheapest way to own that.
Yeah.
Right. But if you want to transact or make a trade or harvest losses or gains or whatever, you're paying per transaction. And sometimes people won't make a decision to do something because they have to pay a fee, a cost, a transaction cost.
Okay.
Right?
Yeah.
Whereas in the fee-based model, it doesn't matter. We don't care about transactions. We want to do what's best for the client. Right. And that's kind of why it's evolved to that, right? But that's just on the investing piece of it. But for the commission-based, are you getting the ancillary services of planning and all the things we just talked about? Yeah. Maybe, maybe not. Just know, what am I actually paying for here and what am I getting for that cost?
Right.
And is it worth it to me?
Yeah.
Because there's many ways that those commissions do work.
Yeah.
And actually, I would tell you, most institutions are becoming more clear about those.
Yeah.
And at the very least, if you don't know what you're paying, you're going to get, if you have a transaction where you have a commission, you'll probably get a trade confirmation that will show the commission on there.
Oh, okay.
Right. So if you don't know where to look, everybody, if you make a transaction with your broker, you're going to get a trade confirmation, and that trade confirmation will typically have that on there. I can't speak for every situation, but
most of them will.
Yeah, I would expect most of them would because they have to tell you what you paid.
Yeah. Well, and it just shouldn't be surprised. I mean, no one should be surprised. You might hear, and I think sometimes out there in the wider world, you might hear, advertising that says, no commission, whatever. And I'm like, let's be honest, somebody's making some money back there somewhere. They couldn't provide the services unless somebody was making money somewhere. So it's just like, maybe it's not a commission, but maybe you're right. Maybe commissions aren't necessarily a bad thing. Right.
They can be good in certain situations.
When I needed life insurance and you did a lot of work to help me find the right life insurance policy for the situation we were in at a price that made sense.
And would you rather do it with me who knows your situation, or should I send you down the streets to some life insurance salesman that might try to sell you something, or maybe not, but that's just another variable you're introducing into the equation when I could just help you solve it. And you already trust me. Yeah. I know your situation. We're solving the problem at hand. Right. Mm-hmm.
And so, and hopefully the nice thing is it keeps everybody kind of in that like win-win bracket on this whole thing. So, I'm paying, I'm paying a very, very, very small, I don't know what it is actually off the top of my head for you, but I'm paying a small percentage of my investments. And of course, what you're hoping is that, if you're doing your investment, doing it wisely, it's growing by far more. And so you and I get to have that kind of symbiotic relationship where I succeed, you succeed, everybody's aligned in the same direction, right? Because, and I think that version of handling things for most people is probably the way to go, because I don't have individual stocks I want to buy and hold on for 25 years. Most of us don't. Like, most of us just want a decent rate of return at a level of risk that, makes sense to us. And I actually really appreciated that conversation, because I think we did your little, like, there's your online assessment risk tool. And then it came back and you were like, yeah, you want a little more than this. Yeah. It's like,
maybe that's not appropriate.
That's probably not appropriate.
But we at least talked through that.
You talked through it and we can explain it and all that kind of stuff. And so, like, that amount is, probably, it probably saved me more from making mistakes by, not getting the kind of returns I could be getting, because I didn't quite understand, what the different risk levels really meant. Like, you understand that, and because you've gotten to know me and know what's going on, you can help move me in that direction. And, and I think that's totally worthwhile. If it's working the way that it's supposed to work the way it's supposed to work, I'm getting a lot of value, for, what I'm paying, even though it might not feel like I'm paying anything because I don't notice it. Like, I don't notice, it happens automatically. But I do think it's a nice setup.
Yeah. And I think the big thing too is to understand for folks is that, all of them can be appropriate. It's just, what do you want? Right. Because if you want a fee only and they just pay, hey, Roy, give me a plan, which, by the way, I can do fee only. Yeah. But I kind of choose not to, because I want to be engaged with what we're doing with the money, because I can give them the plan. They take that plan. They could go to a low cost institution and invest and do all the things they do, but I can't really make sure they're doing the things that they should be doing, right? Like, they could sell in a down market, or they could make some bad decisions. But in fee only, you only just say, do this. And if they trust you and do it, then it could be good. And then you go back to that person when you need more advice, but maybe that's 5 years later. So you didn't pay them another fee for 5 years, right? Right. So you're just paying for what you need when you need it, kind of thing. Yeah. But then you have to execute. So some people are okay doing that. Some people are okay. Some do-it-yourselfers actually are pretty good at that, because they're like, I just need to be guided in the right direction. I know how to do other stuff. Right. Right. The problem comes into when the other spouse doesn't and they pass away, which I've run into. Yeah. But it's just something to think about for our listeners. But then the fee base is really like, you kind of want like a full service person to help guide you and be engaged with you. And when you're paying me an ongoing fee, I have to constantly earn your business, because I call it pay as you go. Mm-hmm. And if I'm not earning your business because you didn't pay a big commission or anything like that, like, you could leave tomorrow. Right. If you felt appropriate, and there's no cost to you to do that. Right. It's my cost to earn your business.
Well, right? And I think, for me, just looking at it from my perspective, is it's also, there's so much volatility in the world now. I mean, we might sit down and make a plan, but things change. I mean, things within my life change, or things around the world change. I mean, we build a plan with a certain expectation around things like inflation. Well, inflation's been all over the place, the last few years, or whatever it may be. We live in a world that seems to have some increasing volatility to it. So even the whole, like, I'm going to plan, and then here's my plan for the next 5 years, I mean, that might work out great, But I know I feel better when I'm just like, all right, I know that there's somebody's actively paying attention to what's going on in the world and everything, because I find it hard to keep track of everything going on. And so I prefer knowing that, if something's coming up that maybe is going to affect my plan or what I'm doing, I know that, one of the ways you earn my business is to keep an eye on things and say, hey, by the way, because of this shift, we might want to rearrange some things.
Yep. And it's funny. I don't know if I've ever said it on this podcast, but I think that the most powerful 3 words that I could ever say to a client: don't do that. Because if they're looking at making a decision that could really harm them, don't do that.
Yeah.
And I've actually had to have conversations before with people where they did, I'm like, listen, if you do this, I'm not your advisor, because this is not right for you.
Right.
And I do not believe that you're making a good decision. It's very rare, but it does happen.
I'm sure.
And I have strong beliefs in how we should do things. So that's part of it. So then when you go back to the commission, though, that could include, there's different commissionable products. Okay. And this is where I think it's the muddiest, because if you do a stock, there's really no ongoing fees. If you do a mutual fund by commission, there's internal expenses in a mutual fund that could continue to pay the advisor.
Oh.
And that's where it gets kind of muddy. And to be clear, everybody, if you're paying a commission for a mutual fund, you need to look into the prospectus to understand what the costs are. Okay. The ongoing costs. And, the money manager whom you're buying the mutual fund from, they obviously have a cost. And then the advisor could potentially also get paid a fee from that cost.
Okay.
So it just needs to be clear, right?
Are those fees typically also percentage based of asset? Okay.
Yes. Of amount of dollars that are in that specific investment. Yeah.
Okay.
And that's just how it's been since the beginning of time, really.
Right.
I mean, with investments that are mutual funds and things like that. But that's where it gets gray. And if you do a mutual fund portfolio, you could have 10 different mutual funds, and you just like, I'm not going to look at all these mutual funds. I just want to trust the person that's selling it to me, right? And then you look at it 5-10 years later, you're like, what am I paying again?
Right.
And that usually comes up when there's a perception of what's the value I'm getting here.
Mm-hmm.
Because if I'm just paying for an investment, why am I paying an ongoing fee for no additional service?
Mm-hmm.
So is there a service connected to that? And there might be, right?
Well,
they could do everything I do and just do it based off of a commission, and they make trades, and that's how they make money.
Oh, okay.
But I feel like it creates a conflict of interest in a way, because should they make the trade? Should they not make the trade? It's going to pay me more if they do make the trade, right? So I feel like I'm put into a conflict of interest. Whereas when I do the fee-based model that I use, I don't get paid any differently if they transact or don't transact. So if we feel like it's right, we do it. Right. That's actually a big difference, and it's for the advisor's mind, not for the client's mind.
Yeah.
Right? Because I feel like it just eliminated that. And I love the fact that I also have to constantly earn clients' business. Yeah. If you don't feel like you're getting value from me, then you should leave.
Yeah.
Like that's truly what should happen, because I should be creating that value.
Well, I think part of the way the system is set up is it's not set up maybe it was like as much transparency as you would see, just because of the nature of how fees are made and paid, and and all that kind of stuff. But you should be able to ask, and you should be able to get direct answers. So if you're talking to somebody, you're interviewing an advisor, or a planner that you want to engage with, I mean, that should be part of the question, and they should be fairly forthcoming in what the answer is. And there's kind of a normal range, that but you can start seeing, you're like, okay, well, and sometimes, the cheapest option isn't the best option, for a lot of reasons. Sometimes the most expensive option isn't the best option either, if the extra bits and pieces and services they're offering are ones you don't need.
Yep.
So you just know where you fall, because there's a variety.
And I want to address what you said. You don't write me a check. I think that's a little bit opaque in itself. And like, well, how does he pay Roy then if he doesn't write Roy a check to pay him? So,
Roy, how do I pay you?
That's a great question. So because we do the fee based, right? I charge you a percentage, and the accounts that we manage for you that have investments in them have a little bit of cash, and we bill monthly in arrears. So for the month of June, all of your accounts have a average balance over the whole month. So we look at the average of the entire month per day, and then we bill off of that number 1/12 of your annual fee.
Yeah.
And we bill it on the first of the month of the following month. So July 1st, yesterday was the bill. Is this? Yeah.
Yeah.
It is how we bill. So you pay for the service after you get the service. Now, by the way, to be clear, everybody, there are fee-based folks, different institutions out there that will charge 3 months in advance.
Oh,
So they would charge you on, July 1st for July, August, September.
yep.
And they charged you it on July 1st. I don't like that model because is it good or is it bad? I don't know, but I don't like it because what is the value of their investments on July 1st? If it's higher and the next 3 months the market declined, you just paid higher fees for future work.
Right.
But on the vice versa, if the market goes down, right? The advisor,
If the market goes up,
the advisor got paid less on those assets over that period of time, right? So it's kind of maybe a wash, if you will. But the reality is the market should go up more than it goes down.
most of the time.
So ideally, you wouldn't be overpaying over time. I mean,
So-
but I just don't like it because it's just, why am I paying in advance?
So I have one more thing, because I have a couple of different ways that I feel like when we talk about fees, especially in terms of investments, you'll talk about, you'll hear them quoted in a couple of different ways, either as percentage or basis points. Please explain.
A basis point is easiest way to explain it is if you have 1%, that is 100 basis points. So
Yes.
a basis points is 100th of 1%.
Right. So if somebody says,
0.001.
right. So if somebody says like, oh, this fund or whatever, their fee is 25 basis points. What they mean is 1/4 of 1%.
Yes.
Okay.
Yes.
Yeah. So I just think, and sometimes people will use those things interchangeably, but
Our industry uses it, and it's one of those things I try not to use it because nobody knows what it means.
yeah.
But a lot of mortgage folk use it too.
Yeah. Well, they talk about paying points or,
What does that
whatever.
mean? Well, it's basis points.
Yeah, basis points or whatever. That's what it is. And it took me forever to figure out, to admit that I didn't know what it meant, and I had to ask somebody finally. But
Yeah.
but sometimes, because sometimes even if you do your homework and look at the prospectus or whatever on the mutual fund or whatever, sometimes that's how it's quoted.
Yep.
Is the fee on this is 25 basis points, and that just feels like a made up unit to me, and I have no idea what it meant. Now I do now, obviously, but yeah. So it's like it's
So to be clear on my math, because I'm a math guy and I said it wrong. So it's one basis point is 0.01
yes.
of a percent.
1.1%. Yeah. So it's
So-
like if a percent is $1, basis points are cents.
Yeah, that's right.
There you go.
1 cent.
Just
That's
completely.
a great way to job. Good
we
job.
just completely
you could be
muddied
an
the water.
elementary math teacher.
I that's probably.
Which I hear you're pretty good in the preschool.
I read books with the best of them. So okay.
All right. So everybody, that's kind of the 3 ways that are primarily used for financial services with someone like me.
Yeah.
Right.
And so I think the big thing of this is hopefully this gives you kind of a basic understanding of it. If it's still a little muddy and you're working with somebody, ask. And if you're working with somebody who's worth working with, they should be fairly forthcoming. And if you don't understand, ask the question. And I think that's a completely fair thing to do. And hopefully you get a good forthcoming answer, and you learn about what's going on and why things are the way they are.
And to be crystal clear, if you walk away from that conversation after you ask that question feeling dumb, then you need to move advisors. Because you should be able to walk away from that feeling confident that I'm paying X for Y service.
Right.
And that should be very crystal clear.
Yeah.
So if you don't understand that, and if you do feel dumb because they try to use big words, that's not okay. And you really should consider moving your money.
Right. And if they do, because sometimes they just benefit of the doubt. Sometimes we all speak our own language. We don't know we're using things. Just pause and ask.
Well, and I would tell you, less experienced advisors can sometimes get lost in they want to show how smart they are.
Yeah.
So it could be not nefarious, but you should not walk away from that feeling dumb. You shouldn't. So.
Well, I mean, so I think it's been good. I think it's good. Fees are part of life, no matter what you're doing, no matter where you're going. If somebody's doing something for you on your behalf, then obviously there's a way in which they are getting compensated. That shouldn't surprise us or bother us. But it is behooving on us to know. I think anybody wants to know where they're going and where their money's going.
That's right.
And make sure that they're also, if you're paying, for somebody, then, when they call to say, hey, like when Roy calls and said, it's time to do your annual checkup, you should do it, even though I just skipped ours. Don't do that. But we
have good clients and bad clients, everybody.
Yeah. Sometimes some of us go back and forth. But I mean, take advantage of the services being offered, because that's the next question is like, okay, what services are you offering me for the fees that I'm paying? And, take advantage of those. If there's an educational piece and all of that as well, you're paying for it, might as well.
That's right.
All right. Well, thank you, Roy. I appreciate it. It's a good conversation.
Thank you. Thanks, everybody.
Thank y'all.
Credentialed Wealth Advisors is a Securities and Exchange Commission registered investment advisor. The content provided is for informational purposes only and should not be construed as an offer for investment advice or the purchase or sale of any security, insurance, or other investment product. All investments involve risk, including the potential loss of principal. Before implementing any strategy discussed, individuals should consult with a qualified financial, tax, or legal professional. While the data presented is sourced from materials believed to be reliable, its completeness and accuracy cannot be guaranteed.